Welcome to Block and Order, the show that explores the legal issues facing the world of Web3 and beyond. I am a slightly older Kyle Lawrence, and with me, as always, he doesn't know half of you half as well as he should like, and he likes less than half of you half as well as you deserve, Mr. Moish Peltz.
Kyle, that was a mouthful. I don't know how to respond to that except to say happy birthday.
Thank you. I'm
But
just impressed that I got it right in one take. That's not easy. But thank you.
yeah, you're
Uh,
welcome.
our very special post NFT NYC conference episode. NFT NYC was last week. It was a slightly different mood than conferences of yesteryear, not as well attended. It's kind of interesting that the conference still focuses on NFTs when all the rage today is crypto and meme coins and all these kinds of things. How did you enjoy your conference going adventures over the past week, Moish?
Yeah, it was, I agree with you. It was a little bit more muted. I did like the time when even the muted conference got a lot of social media snapback that this is a muted conference. I
It
don't even think
sure
we got
did.
the benefit of that this year.
Right.
Look, I think crypto's interesting because when crypto's going wild, Bitcoin is 70,000 plus dollars a coin. You would expect that, the crowd would run wild and
Right.
people would be running in the streets and the conference halls would be full. It was a little counter cyclical here, right? I think
Yeah, it's
Bitcoin
true.
and other major cryptocurrencies are at or, near all time highs. Maybe down a little bit, but come on. But NFTs are not, right? And so I think when you think about it that way, NFTs really haven't recovered in the same way that
Right.
other kind of segments of the cryptocurrency world have. And I think you kind of felt that in the halls. With that said, what I was saying is it gets kind of quiet, the true believers, the people that are doing
That's true.
the yeoman's work were there, and we both, I think, had really productive conversations with some really fascinating people throughout the
It's
few
always the
days
case. Yeah,
we were
great
there.
point.
Yeah,
Did you go to a different conference as well, in addition to NFT NYC?
I did. I went to the Chainalysis Links conference.
Mm,
Shout out to my friend Andrew who hooked me up. And that's a very different type of conference, right? It's a lot more financial focused. It's a lot more law enforcement focused. Both are categories which have been relatively quite busy recently.
so they
I
say.
will note it is tax day coming up, April 15th. If you have not already thought about that, hopefully it's not too late for you.
Godspeed.
Get your taxes on time. I will say, and this is all I think public information, right? The Chainalysis Links conference is attended by a lot of uh, government employees. A lot of those government employees that are thinking about cryptocurrency and are thinking about how to trace and track users of cryptocurrency come from the Internal Revenue Service, who are our friendly government agents responsible for tracking whether or not you've paid your fair share of taxes. So, based on what I saw at that conference, my recommendation would be to accurately and fairly file
It's
or extend your tax return on or before April 15th. And
Well,
I'll
we don't
pause
give
there.
legal advice here on Block and Order. That was excellent legal advice.
It's not legal advice; it's life
It's
advice.
just life
File your
advice,
taxes.
right?
Don't. There's been a lot of people that have gotten, you know, taken down by the tax man. Don't let that be the vector.
Al Capone is a life lesson to us all. Well, my friend, it's time to kick off the order for our 11th episode today. Pretty exciting stuff. So,
Lucky number
kicking us,
11.
lucky number 11. It's not my lucky number, but close enough. Anyway, kicking us off today, Uniswap Labs received a Wells notice from the United States Securities and Exchange Commission. The Wells notice is basically a preliminary warning that informs you that further charges are coming. It's like an enforcement appetizer, if you will, and basically just says that it intends to pursue an enforcement action against the platform for offering uh, unregistered securities and acting as an unregistered securities broker. So, Moish, do you have any inclination as to what the basis of this notice could be? What's the SEC's game plan here? Do you know?
I haven't seen the notice. I haven't heard the substance of what the SEC is coming after here. So in some respects, this is all speculation, but that's kind of the fun part of this, right? And I think people are speculating. there's one of two potential avenues for the SEC to be mad at Uniswap, or to think that they violated some of the securities laws. One would be the operation of Uniswap itself as some sort of unregistered and unlicensed brokerage or alternative trading system, whatever it may be, which we can get into. And I think the other option is whether the recent enablement of a fee switch, that is, holders of the Uniswap tokens now have the potential to earn a percentage of the fee income that the Uniswap protocol receives. And so that was something that was more recently implemented.
Mm-hmm.
From my perspective, I think that makes it the more likely culprit here versus the exchange itself, which has been operating for something like 6 years.
Yeah.
It's like, we're the SEC. Maybe we should get some guidance on whether or not that's something you can do over the last 6 years.
You think?
So we'll see, right? What do you think?
So you think it's the fee switch? I think it's the exchange, just because it's kind of the low hanging fruit of all of these enforcement actions. Whether it's been out for 6 days or 6 years, the SEC goes after every single one of these platforms for acting as an unregistered securities exchange. What's kind of interesting here is that if that is in fact the case, just last week or a couple weeks ago, we talked about how the Coinbase wallet, Coinbase actually won that part of their motion and dismissed that part of the action, into saying that the wallet was not in fact a broker. So if that's what the charges are going to be, at least Uniswap has some legal leg to stand on. Watch, it's going to come out and both of them are going to be in the actual complaint.
Yeah, it's probably both. Right? That's the answer. It's like everything you're doing.
We're both
look, I think that's an excellent point about the Coinbase wallet. I do think that the Uniswap is a protocol versus a wallet. So, right, it's a little bit more of an active kind of intermediate function. But I think, I think Uniswap is like one of the most important technologies in crypto. Absolutely. I think it's one of the easiest to use technologies in crypto. It's been forked and copied a bajillion times. It's really important. I think they also have the resources to fight this, and they've said very publicly that they will be fighting this. This is a really interesting battle, assuming the SEC does actually go forward and file suit here, to see how Uniswap, to see what is the complaint, what is the nature of the suit, and also to see Uniswap, which is a very well-funded large entity, how they're going to defend this. And
that's true.
Unfortunate that we're here, but look, sometimes we complain that the SEC kind of picks on the low hang, like the minnows, and if you're going to pick on someone in crypto, I think this is the battle you want to see happen.
It's like Uniswap is Ivan Drago, so there you go after it. Yeah.
Rocky.
There you go.
Fuck, that's the wrong thing. You can cut that, Chris. Adrian. Yeah, sorry, it's the wrong thing.
You're good.
All right, so moving on to our next topic, the Bitcoin halving is scheduled to occur between April 18th and April 21st, 2024, even though I think we all know it's most likely going to be on the meme date of April 20th.
Probably, yeah.
Yeah, no, and I think it's dialed in. The miners are going to, make sure that happens.
They'll make it happen, yeah.
And the Bitcoin halving, what is the Bitcoin halving? Well, every 4 years, the amount of Bitcoin emitted as a mining reward for each block is reduced in half. So right now it's currently 6.25 Bitcoins per block are received by miners as a reward for mining and processing Bitcoin transactions. And that amount will drop in half to 3.125. So every 210,000 blocks that happens. And in the past, 2016, 2020, each of those past two halvings, there's been pretty significant price increases, within a certain amount of time afterwards. And so this is one of the big stories now in crypto, whether or not there's going to be supply shock, whether crypto prices are going to be driven up. Kyle, what do you think? Is that what we're in store here in April 20th, 2024?
Well, look, the stars are certainly aligned to have some kind of price surge. We have approved ETFs. We have Bitcoin coming in at record highs. When everybody keeps asking us at conferences or whatever, it's what are you bullish on? The answer is Bitcoin. I mean, look what's been going on just in the past year. And you alluded to it a second ago. Over the last three halvings, 2012, 2016, and 2020, the prices went up 90x, 30x, and 8x respectively. Like that's significant value driving. The attention that's being given, the ETFs being approved, and all of the attention that's surrounding Bitcoin, including a topic that we have later on in the show, all signs point to everything here being really bullish for Bitcoin. We can expect to see some pretty sharp price increases. Not financial advice. We are not financial advisor. We're not endorsing it, and so on and so forth. But nonetheless, I mean, look, we're rolling up our sleeves and gearing up for some pretty exciting price action here. What do you think?
Yeah, I think that's right. I do think it's interesting with the retail being involved in the ETFs,
Mm-hmm.
and it's making this really really easy on ramp. You don't have to think about what Bitcoin is or how it's mined or
Right.
how you get it into a wallet. You just buy it in your Charles Schwab account, and those people are going to see and hear and read about the halving and about the mining. You're exactly right. When you go to conferences, when you talk to relatives, I'm now getting the questions of, what is mining? What does that mean? How does it work? In a way that, I probably wasn't really talking about since 2021, era. So I think, people talk about that the price is reflexive in the sense that, there's going to be this supply shock. People are already interested. The ETFs have already taken a lot of the supply off the market. And now this is going to have in the supply. People are
Yeah.
still mining. People are still
Sure.
holding it in their exchange accounts. Anything can happen, right? It could go down significantly too, right? So, but I think the volatility
Don't
is
say that. Don't say
yeah,
that
I
out loud.
know.
Interesting that you bring up about the questions that you're asked, because it never really occurred to me until just now that you said it, that nobody ever asks me anymore. It used to be that, well, these things aren't really valued at anything. What are they based on? They're not tethered to any real world assets. It's meaningless. And no one asks me that anymore. Maybe, sunny skies breed a lot of content with what's going on here. I don't know. It's funny.
Or Michael Saylor's just been on
Or
CNBC
Mike,
enough times.
eh, Just right. Just hammer that message home. Exactly. So, shifting gears a little bit, everybody's favorite whipping boy, Sam Bankman-Fried, the architect of the FTX catastrophe, was sentenced last week in the Southern District of New York to 25 years for fraud and money laundering at FTX, and is ordered to pay back $11 billion. That's a lot of money. I don't have that in my couch cushions.
I don't think he
Uh,
does either.
well, not anymore. SBF was found guilty on all 7 counts, including 2 fraud charges and 5 conspiracy charges related to his management of FTX and Alameda Research. Um, Moish, you're a litigator. What do you think about this? This sentence. Is it fair? Is it too much? Is it too light? What are your initial reactions to how this went down?
Yeah, my initial reaction was this seems about right. And the more I
Mm-hmm.
think about it, the more I kind of feel that way. Some people were expecting like 30, 40, 50-year sentences. Actually, the betting market, poly market, I think had 40 to 50 years
So
as the
ridiculous.
most likely sentence. And
Mm-hmm.
that just seemed like possible, but probably overkill.
Right.
And the Judge Kaplan, who was the person that handed down the sentence here, um, basically started off with, under the sentencing guidelines, right? He should be getting 110 years. And that's where it kind of started from. But judges are reluctant to basically, throw
Sure.
someone away and lock away the key. Um, you know, he's going to be in his 50s by the time he gets released from prison. There's no parole in the federal system. Um, so he's going to be in jail for most of his adult life, right?
Yeah.
And yeah.
What's interesting here is, while the maximum sentence could have been 110 years, the prosecutors weren't really gunning for that. I think they were pushing for a 40 to 50-year sentence, and that's obviously more than what Elizabeth Holmes got. It's substantially less than what Bernie Madoff got. But when you think of the rhetoric that was surrounding the prosecution and their claims, and we need to make an example of this guy. He's the reason, crypto. He's the face of crypto and failed crypto and retail, all that stuff. But when they come out and they say, well, 40 to 50 years is their sentencing recommendation, they were talking about this on the great podcast Unchained. I don't want to take credit for it, but were absolutely right when they said, if that's what the prosecution is gunning for, they obviously don't think it's as serious as they were kind of making it out to be. It's like when you negotiate for a used car, they start as high as possible, you go as low as possible. They started at 40-50. The defendants wanted 6.5 years. They split the difference, and Chris Voss somewhere just burned a Dolby in effigy. But but that's what happened. And to me, that's really telling as to what they really thought of all this. Like, this was, yeah, he was not the most innocent guy, but at the end of the day, he was largely just a moron who did some bad things, as opposed to a guy who was really purposely trying to screw everybody over.
That's interesting that you took that away from it, because I, the Judge Kaplan again, who was basically the only person in charge of this decision, really criticized SBF for being evasive
Yeah,
and not candid with the court, and deflecting blame and not taking responsibility. And he said all that and said, well, it could be 110 years, but then kind of, got guided down from there.
right.
So, I disagree a little bit that the recommendation from the prosecutors at 40 to 50 years means that they were like, well, it's not so serious. I don't think that was really the tenor here, in my opinion.
Hmm.
I just think that fundamentally the judge just thought that the right sentence was what he gave. And as I've said, as I kind of like I've slept on it, that seems like no one's really gone after, after this sentencing, been like, it was completely wrong.
That's
I
true.
think it's been pretty
Yeah, I
much
think that's
like,
fair.
yeah, I guess that's fair.
I saw Goodfellas. Prison doesn't seem that bad.
I get to slice the little garlic.
Exactly. That sounds kind of nice.
All right, so turning to our next topic, and this is one of the new metas. Maybe not new. Maybe we should have actually gotten some Bitcoin Ordinals when they were the new meta, but increasingly Bitcoin Ordinals are being considered not just by NFT degenerates and Bitcoin aficionados, but also leading investment firms like Franklin Templeton, who recently released a report saying that these have a chance to actually really increase the Bitcoin fee revenue that's generated by miners. And so Bitcoin Ordinals, if you don't know what these are essentially a special kind of NFT, which are built on the Bitcoin blockchain and are linked to a Satoshi. A Satoshi is the smallest unit of a Bitcoin. And there's a Ordinals protocol, which allows new token standards like BRC20, which is, I think, the primary standard right now, as well as Runes, which is a forthcoming standard, to allow different types of tokens to trade all on the Bitcoin protocol. And this trading has really taken off over the past few months. And so, Kyle, I mean, do you think that these Bitcoin ordinals and other kind of uses of the Bitcoin blockchain uh, are going to propose a material use for Bitcoin aside from, I send Bitcoin from me to you?
I certainly think the stars are aligned for that to happen. I mean, just it's evidenced by the fact that Ordinals surpassed Ethereum in trading volume as of December of last year. The sort of scuttlebutt or criticism, for lack of a better word, that I always heard about Bitcoin is you can't do anything with it. It's just a store of value. It doesn't do anything. Well, now we're seeing that the proof is in the pudding, that that's not the case. Now we're going to, develop, maybe we'll have a Bitcoin, BRC20 summer, coming up. You couple this with the halving and then the ETFs. It's like all of these things, just Bitcoin. It's all Bitcoin all day. I think this is really, really fascinating and interesting. It's not something I was super familiar with, all that recently. I've been reading more about it of late. But with everything coming up, the halving coming up, the ETFs that I keep mentioning, I mean, this is just fascinating stuff. I'm really curious as to see where we are 6 months from now when the runes are out, and there's going to be more assets that we don't even know the names of, I think, between now and then.
Well, so do you think that gives Bitcoin NFTs, ordinals, the potential for like longer staying power than perhaps Ethereum NFTs that seem to have mostly crashed and not come back? Like, the Bitcoin being the original blockchain, now you
Yeah.
have these kind of rare Satoshis that are colored coins or things like that are kind of the earliest digital artifacts on Bitcoin. Now you have these new tokens. Maybe this is something that has just more staying power. What do you think?
Well, I think they can learn a lot of lessons from, the NFT, rise and precipitous crash that they had a couple years ago. I think they're a little more efficiently created in terms of the underlying software and code. I'm not a tech guy, so I can't explain it any better than that. But I think whenever, just like in any tech industry, whenever whoever's first is not always the one who lasts. It's the person who comes up behind them and they say, well, this worked for them and that one and that didn't. So let's optimize that strategy. I think you can see the same things play out. And especially when you have a backbone like Bitcoin. I mean, there's a lot there to work with. So I
Yeah,
think
but
it'll
I
be
think it's
pretty
a double edged
interesting.
sword. I mean, if the user experience, we're not moving away from a frictionless kind
Yeah.
of non crypto native experience, I'm concerned that this might be moving backwards.
Hmm.
But in some respects, the technology has also made it a little bit more user friendly. So
Right.
we'll see.
Okay, another ne'er-do-well in the good old world of Web3, Avi Eisenberg, who I liken to Bobby Axelrod, is facing trial for charges in connection with commodities manipulation and fraud. And basically, what this guy did, he's accused of illegally gaming the Mango Market's futures contracts by manipulating the price of the MNGO, the Mango token, and then effectively borrowing all of Mango's deposits against this position, walking away with over $110 million in cryptocurrency that other people had deposited on the platform, and later returning a portion of that in exchange for a promise that Mango's backers would not seek his prosecution, a promise that, needless to say, was not kept. The prosecution alleges that Eisenberg's trades were essentially a scam, comparing it to offering a quote beautiful fake diamond ring as collateral for the loan. And Eisenberg's position is that his actions were basically just gaming the system. He's a self-proclaimed game theorist, which to me is a very interesting juxtaposition. So, Moish, from what you understand of this guy, I think you're a little more negative on him than I am. But what do you think is going to happen to him? You think they're going to throw the book at him? Do you think he has a leg to stand on with his position? Is I'm just using the
Well,
tools that are in front of me.
yeah, I mean, they have thrown the book at him, right?
Well, yeah,
Look, I'm kind of sympathetic to the argument of the his actions were a legal use of the protocol as it was designed, um, but were used in a way which was not friendly.
yeah,
But so from a criminal liability perspective, I am quite sympathetic, and I read the motion to dismiss that was filed earlier this I think this week or last week, and they make a really good case, right? These using a system as designed. It was not market manipulation. These were not commodities futures contracts. These are like crypto mango tokens that everyone trading them knew they could lose all their money.
right,
I played the game. I won the game. Ha ha. It's a little bit ruthless, but that's kind of that's what we're doing here, right?
right,
Um, so the criminal prosecutors obviously don't see it that way, right? And I get that this is alleged manipulation and fraud,
right,
and how they're coming to that. So it's a really interesting case. Um, you know, I I don't even know I can. This is just have to see how it plays out before you can
right.
even like pick a side here.
I just think it creates somewhat of a slippery slope. I mean, you mentioned it. It's at what point does gaming the system stray into skirting the line, maybe some illegality? It can get very awkward in some of these more nuanced cases. And it just reminds me of, it's not a direct one-to-one, but people who are involved in the Celsius bankruptcy, anybody who saw what was happening pulled their money out, and now they're getting notices saying, "Hey, you got to put some of that money back in." They're like, "Why do I have to put money back in?" Because someone else couldn't read the tea leaves and see what was going on, but they have to. And it to me, it's just very gray, and I don't know. I don't like it. I don't like it, Moish.
Now, look, I mean, I think it sends a message that if you're a tech geek and you see something that is a potential exploit where, hey, I could contribute this and take out, a huge amount of money there. Is it legal? I don't know. Maybe, maybe not. Right. But if you don't want to find out, like this is a standard, like like fuck around, find out kind of situation, right?
I mean, I have to go on somewhat of a rant for a second. Forgive me, but I hear what you're
Please,
saying, and
Kyle.
it's you're not wrong, but it's like Martha Stewart, high profile situation.
We'll see
Somebody
where the
calls you and says, "Hey, Martha, guess what? The shit hits the fan, and you're about to lose all your money unless you pull the money out." You're going to pull your money out. What are you supposed to do? Leave it in there and lose it all? Like the concept of that is insane to me. And the fact that they go after people and throw her in jail. I'm not saying
But
insider trading is okay, but that's crazy to me.
that's a fundamentally different position, right? Because that's a defensive position. That's you saying, I have my money in this thing. If I don't take it out, it's all gonna go to zero. And if you're a user of Mango and someone said, hey, someone's in the middle of exploiting this thing, quick, take your money out. I don't think that person's being prosecuted, right? The
Right.
person being prosecuted is the person that's like
Is the one
causing
doing
the
it.
market
Yeah.
crash, allegedly. Um,
Allegedly.
allegedly. So, you know, I think there's a really solid legal argument that the thing he did was not manipulation and was not illegal.
Right.
But the point is, he's the one that instigated the downfall of this protocol, and now he's facing a legal challenge. He's going to have to defend himself, right?
Ugh. I've become everything I've always hated. I'm sitting here advocating for a guy who got $110 million off the protocol.
He gave some of it back, Kyle. Come
He
on.
gave some of it back. I know. All right, fine. He's great. He's a saint. Glad we cleared that up.
All right, on to our next topic. Increasingly, we're seeing the real world assets, the tokenization of real things, and I guess even like funds, which somehow are real world assets but aren't real. And in this case, I want to talk about the Diamond tokenization on the Avalanche blockchain, which is created by the Diamond Standard Fund. And they introduced a security token on the AVAX C chain representing a stake in the fund benchmarked against Bloomberg's Diamond Index. So if you're a accredited investor in the US, you can now go on the Oasis Pro market and register yourself for these securities and buy them in your IRA and do other cool stuff, and then have a secondary market for those assets afterwards, which I think is fundamentally better.
See everybody.
A better
Take
way
care.
to buy a private fund than just like signing a subscription agreement and like not hearing from anyone for 10 years, which I think is a lot of how these private funds work. So you have a real liquid secondary market traded on the blockchain. I think that's an improvement. And there's several other real world asset examples we can talk about recently. So Kyle, is this the future of private investment?
I sure hope so, and I think you're right in that it's a better way. Look, there's never a bad time to build a better mousetrap, and these types of funds using the technology that's available to them, it just offers so much more transparency. I mean, I'm a securities attorney by trade, and a lot of times you're exactly right. Somebody cuts a check, and then 6 months go by, and they have to make phone calls to find out what happens. With these protocols, you don't have to do that. It's true.
Did you get my check? That's all I want to know, right?
Right. Well, I know you cashed it, so obviously that's usually the telltale sign. But I think this is really fascinating. And you were talking about some other of these projects. BlackRock, somewhat famously has unveiled the BlackRock USD Institutional Digital Liquidity Fund, which just rolls off the tongue, but it's called the BIDL Fund. Because why not? Because of course it is. And the fund is backed by cash, U.S. Treasury bills, and repurchase agreements, and it offers a daily yield payouts via blockchain tech to its token holders. Same thing. I think this is just awesome. I love reading about these things, and I'm really excited to see, what other ways that this can be implemented. Were there any others that came up that you were looking at?
I'm glad you asked. I just read today that Bitfinex Securities is offering a debt fund for the construction of a Hampton Inn hotel near the El Salvadorian International Airport. And so you're seeing another approach here. I think the BlackRock one was interesting. I saw that it had a $5 million minimum, but that you could transfer directly to USDC. So for institutions, this is actually, if you want to have like on-chain liquidity and have USDC into BlackRock BIDL token, where you're getting treasury income, then you swap that back to USDC and do other, degenerate crypto trades, great. Bitfinex, I think this is for non-US persons. If you want to get 10% yield, like funding a hotel on the blockchain, like cool. And if you want to own a diamond fund, like you can do that now in like Oasis, which is I think it's an alternative trading system. So like it's registered with the SEC and FINRA, and you have a hope that the platform at least is kind of registered and not going to go anywhere. So all these options I think are just in the past couple of weeks, and increasingly you're seeing like really cool fund ideas pop up. And I know it's just an area that's really cool, and I'm excited to see the adoption pick up and continue, and hopefully, not everyone loses their money in this category.
Well, and the fact that they're compliant with some
right.
Some of these, which is what we've all been clamoring for, and is fantastic. So it's funny that these got a little bit less fanfare than the ETFs did, but they're just as important. And I don't know, yeah.
Right. It's like, look, the same thing you've always said 100 times. Like if someone like hears the word security, all of a sudden like they run away, and it's like, oh, actually, you can trade securities. There's legal ways to do that, and
Yes.
I mean that's one of the things the SEC has been saying, which like okay, fine, but they haven't really shown a great marketable way to do that, and so you're having to have these people on the more experimental end doing like diamond funds on Avalanche, and then like BlackRock. So that's kind of cool, right? And across the spectrum, you're seeing different kinds of rollouts of these real world asset funds.
Yeah. Oh, great stuff as always, Moish. And not a full topic for today's show, but somewhat famously, the buy Bitcoin guy, the guy Christian Langelis, I think that's how you say his name, who went viral back in 2017 when he sat behind Janet Yellen, who's brilliant, by the way, with just a loose leaf paper that said buy Bitcoin on it. Well, he's going to sell that now to fund his next project, and he's going to apparently collect $350,000 projected for it. So I, not to be outdone, am ready. I'm ready for my viral moment. Now I just need to orchestrate a scenario where I sit behind Jerome Powell in a public setting. So producer Chris, produce that. That's it. That's what I need you to make happen.
I bid $1.
Listen, I'll take what I can get. Beggars can't be choosers. Well, that about wraps it up for this episode of Block and Order. Don't forget to like and subscribe and follow us on all our socials. Links are down below in the show notes. If there's a particular topic you'd like us to cover on the show, please drop a comment down below and we'd be happy to cover it for you. Don't forget that any assets, cryptocurrencies, NFTs, or BRC tokens that we discuss on the show, not to mention any of the clothing that we may wear, does not in any way represent an endorsement of these assets, even though we may own some of the assets that we talk about on the show, in some cases irresponsibly so. Always consult your own attorney before taking the plunge, do your own research, talk to your own representatives. Don't forget about tax day. Very special thank you to producer Chris for staying up late. Without him, the show would not be possible. And so for that, for Block and Order, I am Kyle Lawrence.
And I'm Moish Peltz.
So long, everybody.